25% instead of 10%, that materially changes the game, doesn't it, on these tariffs?
Look, if the Trump administration actually implements this, I think it does raise the stakes, as you've pointed out earlier. It does beg the question of what China's response would be. I think what we've seen over the last week or so is that China's policymakers have been a lot more focused on shoring up the domestic economy. And I think that's really where, we've certainly focused our attention over the last week, the move in some of the monetary policy measures, as well as some indications of more fiscal stimulus. So I think that tells you they are concerned. But I think at the moment, the response from China seems to be more focused on putting out domestic fires as opposed to fighting the trade tensions with Trump.
Eric, fighting the fires, if you can, before they've actually started burning, and in anticipation of people perhaps delaying investment decisions, perhaps not even getting to the same sort of capital expenditure, that these stimulus measures could actually make up the shortfall.
Well, Rich, I think there's a couple of interesting angles here. The first of which is if you look at the domestic economy, there have been some signs of slowing. The impact of deleveraging has tightened financial conditions. And I think you're seeing these early policy responses designed to try and neutralize that. Now, one thing that I think is quite positive is if you go back to 2015, the last time we had a big currency depreciation in China, we went from 620 to 660 in the currency, and volatility skyrocketed from 2.5 to over 10 in currency options. This time around, we've gone from 640 to 680, and currency volatility has moved from, let's call it, 4.5 to 6.5. The key point is we have yet to see a big kind of explosion in capital outflows. And I think that much more balanced response, both domestically and internationally, will be incredibly important over the next 3 to 6 months.